Hello. Welcome to my channel, my dear friends. My name is Avilas and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of gold USD in front of us. And as we all know, that there is not much movement, not much volatility in the market right now. And because of Christmas. If you look at the forexfactory.com or any economy calendar, you'll see that we do not have much events lined up for this year, and especially after Christmas, the market will be enjoying the holiday. There are many bank holidays, so market will remain flat because there will not be much movement. And I think for 1 or 2 days there will be some opportunities before Christmas, but after 23rd, after 22nd, okay, there will be any move in the market. It will be an unofficial holiday for the traders till first week of January. Okay, so my dear friends, give time to your family, enjoy the holiday. Now let's have a look at the chart of gold USD, because right now we can see that market is just doing the thing we expected. On the 4 hour chart, on the 4 hours time frame, we discussed about the possibility of the formation of the head and shoulder pattern. And as per our expectation, market did form the second shoulder here, and we can see that market is reversing. So as a result, there is a possibility that in the coming days, market may show a downside. Market may show a kind of trend reversal on the chart of gold. Because if we look at the chart of DXY, then we can see that DXY, after this huge fall, DXY is trying its best to recover. Okay, so by next year we may see some recovery, and yes, we may see some downside, some correction on the chart of gold as well. Because in a previous video we discussed about the weekly chart of gold, where the gold chart was struggling to cross the resistance of 1824, 1825 level. And we also had another resistance in the form of 50 moving average. So for the past 2 weeks, gold was forming dojis and spinning tops, and as a result, we are witnessing some sort of softness, correction on the chart of gold right now. And especially in this situation when we do not have much volatility in the market, so my dear friends, it will be better to look for small profits. Try to trade from one level to another. Do not try to hold a trade for a couple of days, because there will be many holidays. So first of all, gold will be approaching the trend line here. The trend line is a dynamic support for the market, which has been acting as a very strong support for quite some time, and market is approaching the trend line again. But this time you must be careful, because market is approaching after forming the lower high here. Lower highs are not a good symptoms for an uptrend market, and we also have a head and shoulder pattern also. So if you have been watching my videos, then you know it very well that I do not like to trade on patterns, especially head and shoulder. But yes, it's a very popular pattern around the world, and it works also for many. Okay, so as a result, I'm discussing it. Anyways, first of all, the trend line. Trend line is the first dynamic support for the market. Observe the market around the trend line. If possible, try to draw the trend line on your chart, but the level will be around 1779 to 1778. I cannot give you the exact number because this is a dynamic support. Observe the market around the trend line. If you see market taking support around the trend line, you can go for a buy position. In case market breaks it, no need to take any sell position, because overall the market is still in uptrend. Do not forget that. So wait for the market to reach 1775 to 1774 level, because this is the next support for the chart of gold. If market breaks trend line, no need to take sell position. Wait for the market to come down to the support of 1775 to 1774. If market bounces, go for a buy. And the other support levels on the chart of gold are 1766 to 1763. I have already discussed in my previous videos. I have already shown how we have derived these levels. Okay, so I do not want to bore you again. So we have got couple of around 4 supports on the chart of gold right now. First of all, the trend line. Okay, though the trend line has been acting as a strong support for quite some time, but we must understand that market is forming a head and shoulder pattern or higher lower highs here. Okay, so as a result, market may not take support this time. So observe the market. In this market situation, when we can see that the volatility of the market is very low, market should take support. Okay, if market takes support, at least you can go for a buy position for 20-30 pips easily. If market bounces, go for a buy position here. If market breaks it, respect the overall trend of the market, don't sell. Okay, and wait for the market to come down to the second support around 1775 to 1774. If market takes support, go for a buy position. In case market shows volatility during the European session or US session and you see market breaking the support and going down, then you can consider taking a sell position for 40 to 50 pips. In this market situation, I will not recommend a trade for 200 200 250 pips. Okay, this is not the ideal market. This is not the ideal market for a big trade. And moreover, we need a fundamental factor. Okay, we need a fundamental factor. Fundamental factors push the market, and right now we do not have to push. So as a result, in case market starts falling 1775 or 1774, if you see that the size of the candle is big enough, it means that sellers are trying to push the market down, and you can consider taking a sell position. But still you need to be careful, because overall the trend of your gold was bullish. Okay, do not forget that. And gold has been forming dojis and spinning tops for the last 2 weeks. So this week also it may form a doji again, isn't it? So as a result, go for a trade of 40 pips, 50 pips for your own safety and exit. Yeah. And wait for the market to come down to the next level of 1766 to 1763. If it bounces from there, you can go for a buy position. The ultimate support is around 1745 1740 level, but I don't think so market will be approaching 1745 40 level in this situation here. And the resistance level are still very much the same. The ultimate resistance is around 18.7 to 1813. Yeah, 1813 level. I'm talking about this level here, because market was unable to cross this level, and to resume the uptrend, to continue the uptrend, market will have to cross the previous high of 1824 or 25 level, because this was the level from where market failed on the weekly chart. So this level will be very important. See this one. Okay, so try to trade from level to level. Okay, if you see that market is, after taking a position, market is reversing after 20 pips, 25 pips, be happy with that. As a trader, you need to be flexible. This is a festive season, so as a result, there is not much liquidity or volatility in the market. So as a result, you need to plan your trades accordingly. Yeah. Hopefully you got my point. Follow proper risk management. My analysis can be wrong as well. After all, nobody is 100% accurate in the market. Bye bye, take care.